Hi, this is Tracy and this is the online lecture on the cash budget and cash receipts. The cash budget needs to be created on a regular basis, and usually that's on a monthly basis to show exactly what the receipts are going to be in cash and the payments are going to be in cash. And that's going to result in giving you a cash balance at the end of each period. So that's what it's saying in this first paragraph. So monthly cash budget produced with receipts and payments of cash. Okay, and that's going to give you cash balances at the end of each period of time. All right then, so let's have a look at what we've got down here in terms of a pro forma. So just across the page there, what you can see is in terms of getting your cash budget together, you're always going to start off with your receipts at the top here. And you're going to actually put into there what your cash sales are. So some of those you're going to get the money straight away. And your credit sales. Now usually with your credit sales, you're going to need to do a working to establish what they are, because it's going to be a little bit more tricky to establish in which month the cash was received for those credit sales. So we'll talk about that in a bit. You may have some other cash coming in as well. So maybe you've taken out a loan in the year, so the bank's giving you some money, or you've got some interest received, or you've got some proceeds from selling an asset. Okay, well any of those, you just need to make sure you get those into the correct month. And as you can see across the top here, that's where we've got our different months. So that's going to bring us to our total receipts. Past that, we've then got our payments. So cash purchases, again, relatively straightforward because we're going to know exactly when we've purchased them, which month. Creditors, well, again, we're going to need to do a working probably to establish when we've paid our suppliers. Wages and overheads, those sort of things tend to be a bit more obvious and straightforward because they tend to be paid in the month in which the work is carried out. That's going to bring us down to our total payments, and for each month we're then going to take our total receipts less our total payments to give us our net cash flow in the month. So that may be an inflow or it may be an outflow depending on what's happened in the month. Last little bit at the bottom is really about giving us our final cash balance. So we're going to start with our brought forward balance. Our net cash flow is going to be added to that brought forward, which is ultimately then going to give us a carry forward balance. And the main object of this is really to identify, are we going to run out of cash at any point? So we're really looking at these bottom line figures just to see, am I always okay for cash, i.e. is the figure positive? If it's negative, that means we're going to start running out of cash. Our payments have exceeded our receipts, and then we're going to need to find some sort of way of funding that, maybe through an overdraft or a loan or some other sort of funding. All right then, so just skipping back to the prior page, it gives you an approach to setting up these sort of questions if you have to do a long one. So in terms of setting up the cash budget pro forma, usually what will happen is the computer screen will have set this up for you, but you might have to select some of the item headings in there. So things like cash receipts, payments from your customers in terms of credit payments, wages, overheads, whatever it happens to be, you might have to select those and slot them in. Second job is then to work out those cash receipts from customers, which should be relatively easy for the cash ones, for the cash sales. But for the credit sales, then it's going to be a bit more tricky, and that's what we're going to go on to next, discussing how you actually deal with that. Think about if there's any other sources of cash income. So like I said, maybe proceeds from a loan. Make sure you've added those into the receipts part at the top. Then go on to the payments side of things. So work out your cash payments. So again, look at which parts are cash, and then work out in terms of your credit when they've actually paid suppliers, if you've been given some sort of credit term. So you'll be given the information in the question. It's just a matter of getting it into the right month. And again, like with the receipts, any other payments, so those wages and overheads, make sure you're getting those into the correct period of time in which they've been paid. And lastly, you can basically do all the adding up exercise, so work out your overall cash movements. That bottom section there, where you've got your brought forward plus your net cash flow, giving you a carry forward. Okay then, so that's what we're aiming towards, getting this pro forma together, but we're just going to start by looking at this receipts side first of all, and in particular, how we deal with getting these cash sales and credit sales figures together. Okay then, so just down here we've got an illustration of what you might see in terms of information in an exam question. So for company here, we've got some sales as follows. So December, £10,000, January £12,000, and February £15,000. Okay, company has standard credit terms of a month, so that's what they tell their customers, they get a month to pay. That's for the customers that are given credit terms. Now, some of the customers they have are cash customers. So as I said, 50% of the company's sales are made for cash, and the other 50% are actually on credit. All right. So for those ones on credit, they're normally given a month to pay. However, also the company offers a 5% discount on its sales price if the credit customer pays in the current month. So if it pays at any period up to that 1 month point in time, they're going to be given a 5% discount. So in December, of those 10,000 sales, if they pay in December, they will get a 5% discount. And it tells us 25% of the credit customers take this option. So 50% are on credit, 25% of those 50% actually take that option up. All other cash is received in the month following the sale. So even though they've got credit terms of a month, most people end up paying after that 1 month is up. What do they want us to do? Well, they want us to calculate the cash receipts for January and for February. So let's have a look. First step then, we always start with the cash sales because they're going to be the easiest ones to deal with. And remember up here, we said that 50% of the company's sales are made for cash. So in any month, whatever the sales are, I can take 50% straight. I'm going to get this cash straight away in that month. So for January, £12,000 worth of sales, 50% of those are actually going to be in the month. So as it says there, take your 12,000 times 50%, and that's going to give us £6,000 coming in cash in January. Same thing for February, just look at February sales. Well, it says up here £15,000 worth of sales, 50% of those were for cash. So 50% of 15,000, £7,500. Okay, so that's relatively straightforward looking at the cash. Next step then, I'll have a look and see what we're doing with our credit sales. Now, most complicated is the ones with the discount, so I'm going to do those last. I'm going to deal with, first of all the rest of this cash which received in the month following sale. So remember, 50% of our sales are on credit, and effectively 75% of those are actually going to pay in the month following sale because 25% of them take up the early settlement offer. All right then, so next step down then, as you can see, okay, I'm going to look at my prior month sales because remember that's being paid in the month following. So for my prior month, that would be going back to December, and in December there were £10,000 worth of sales, and 50% of those were on credit, and 75% will then pay in the month following sale. So taking my 10,000 sales then from December, I'm going to take 50% of those, because remember 50% are our credit sales, and 75% of those credit sales pay in the month following, so that's pay in the month following our sale. Okay, so 75% of the credit sales. So 10,000 times 50% gives me 5,000. 75% of those, 3,750. That's what the figure is in terms of the cash coming in the January month from those December credit sales. Same thing then when it comes on to February, I'm looking at the January sales that's going to come in cash a month afterwards. So just going back and checking our figures, remember January, £12,000 worth of sales. I'm going to take my sales, again, times my 50% on credit, and 75% of those paying in the month following sales. So 12,000 times 50%, that means 6,000 take up the credit option, but only 75% of those pay in the month following, 4,500. So that deals with the credit sales that don't get a discount, they just pay in the next month. What about those that do get a discount then? So going back to look at our information, let's just remind ourselves. We said down here they're going to get a 5% discount on their sales price if they pay in the current month. So if in the same month the sale happens, they make payment, they will get a 5% discount, and 25% of the credit customers decide to take up that option. All right. Okay then, so looking at our calculations down here, next one we're looking at credit sales, the ones that come through in the current month with the discount on. So this time I'm looking at my current month sales, because remember those are going to get paid in the current month even though they've been extended some credit terms. So January is my current month I'm looking at, so let's have a look at what they told us, and we said £12,000 worth of sales in that January month. So taking my 12,000 of January sales times 50%, which are on credit, times 25% take early settlement discount, and then times 95%, they pay 95% of their bill, yeah, because they're getting a 5% discount. Alrighty, so 12,000 times 50%, so 6,000 are taking up a credit option. 25% of those then elect to pay in the current month and take the early settlement, so that leaves me £1,500 worth. But they're not going to pay that much because they're going to get the discount, so times 95%, that's going to leave me with my £1,425 in cash coming in January. Same thing then for February. Well, I need to look at February sales this time, so just going back and having a look at the information in the question. Yeah, up here we said £15,000 worth of sales in February, so this time taking off 15,000, again 50% take up the credit option, 25% of those go for an early settlement discount, and they pay 95% of their bill. So 15,000 times 50% gives me 7,500 taking the credit option. 25% of those opt to take the early settlement discount, so that would leave me 1,875, but they're only going to pay 95% of that bill, so we're going to end up with £1,781 worth of cash coming through in that February month. All right then, what does that leave me? Well, I've just then got to add it up in terms of my total receipts, so having a look and adding everything up. Well, in January, 6,000, 3,750 and 1,425 gives me that 11,175 total cash receipts in January. In February, adding those figures down, that leaves me with 13,781 in the February month. Okay then, so that deals with the sort of thing that you're going to have to deal with. And there's one last little point to be aware of, which is bad debts. Now, sometimes you will end up with bad debts. So customers that just don't pay for some reason, they go into liquidation, they do a runner, they decide they don't want to pay you because they don't like the standard of your work, whatever it is, they become bad debts and they never get paid. So if that's the case, you are never going to see the cash, so you will never see it in cash receipts. That's what it says there. If that's the case, you will never be shown in cash receipts because no cash is ever received. So having a look down here then, we've got an example with some bad debts incorporated into it. Okay then, so this time we've got a company, we've got sales in March, April and May, and we've got 18,000, 8,000 and 9,000. Standard credit terms again are 1 month. And the terms this time, 20% of the company's sales are made for cash and 80% are on credit this time, so lower proportion of cash sales. However, what else do we know about those credit sales? Well, company offers a 2% discount, so we've got an early settlement discount if the credit customer pays in the current month. 50% of those credit customers take up that early settlement option. Okay. 45% of all other cash is received in the month following the sale, and 5% of customers never pay. So of the credit terms, effectively 45% is received in the month following sale, 50% in the current month, 5% never pay, so that makes up your 100% altogether. All right then, so what do they want to know? Well, they want to know what the cash receipts for April and May are. So just the same as we did before, I'm going to start off with my cash. And remember up here we said 20% of the company's sales are made for cash. So for April and May, I'm just looking at the sales and taking 20% of those. So let's start with April first of all. 8,000 quid's worth of sales, 20% for cash. So filling in my table here then, 8,000 times 20%. That's giving me 1,600 in terms of my cash sales for April. For May, same thing, but I need my May sales, so I've got £9,000 worth of sales there. So 9,000 and 20% of those are for cash. So that's going to give me 1,800. All right then, so that's the straightforward part done. Let's go on to talking about our credit sales then. So just the same as we did in the last question. I'm going to deal with the easier bit first without the discount. So going back to our information, remember 80% of our sales are on credit and 45% of all of those credit sales are received in the month following the sale. All right, so to get my April cash receipts, I need to look at my March sales first of all. So I've got £18,000 worth of sales, 80% of those are on credit and 45% pay in the following month. So taking that information, 18,000 times my 80% on credit times 45%, that's the proportion that pay in the following month. So let's work that out. That's going to give me £6,480 worth of sales. Similar thing for May. So to get my cash receipts in May, I need to look at my April sales because they're the ones that are going to then come through in the next month. So I've got £8,000 worth this time. Again, 80% of those are on credit and 45% of the people pay in the following month. So 8,000 times 80% times 45% gives me 2,880. Finally, let's deal with those credit sales that pay in the current month. So, i.e., they're taking advantage of the discount. So, if they're going to pay in the current month, and I'm interested in April, it's going to be April sales that I'm interested in. So, £8,000 worth of sales, 80% are on credit, and 50% of those take up the early settlement discount, which is a 2% discount. So I'm going to take my 9,000, 80% of those, times another 50%, which take up the early settlement discount, times 98% to take into account that 2% discount on that sales value. Alrighty, so let's write all that down. So for April then, and we said in April there's £8,000 worth of sales, 80% are on credit, 50% of those take up the early settlement discount, and they're only going to pay 98% of the sales value. So 8,000 times 80%, 6,400 of credit, times 50%, leaves 3,200 for those people that were taking up the early settlement discount. Apply your discount, times 98%, leaves you 3,136 as the cash received in April on those credit sales with settlement discount. Okay, same thing for May then, but we're going to use May's sales this time. So looking back to the information, they said £9,000 worth of sales in May. So we've got 9,000, 80% on credit, 50% of those taking up the early settlement discount, 98% applying the early settlement discount. So 9,000 times 80% times 50% times 98%, and that's going to leave me £3,528. So total receipts then, let's have a bit of an add up. So 1,600 plus 6,480 plus 3,136, that gives me £11,216 of sales receipts in April, so that's our cash coming in. What about our cash received in May? 1,800, 2,880, 3,528, 8,208. So work that out. Once you've done this little working, you can then substitute these bottom line total receipts figures back into your pro forma for your cash flow statement. Now, don't forget, we talked about other income as well. So other income you might receive, just a reminder here, interest received from the bank account or proceeds from the sale of assets. So you've sold a car or something in the year and you've got some cash come in. Also, don't forget loans received. So if you've taken out a loan with the bank, they may have given you £10,000, that's cash coming in. Anything like that, ensure the receipt is included in the month in which your cash is received, and then you shouldn't go too far wrong.